Welcome to the Friday Guideline Update for the Mortgage University, presented by Midwest Mortgage Capital. My name is Jennifer Prideaux, and today we will be talking about gift funds. In order for funds to be considered a gift, there must be no expected or implied repayment of the funds to the donor by the borrower. Therefore, this cannot be a loan of any kind. It is truly a gift from one individual to another. There are many different people that can provide a gift to the buyer. A borrower's relative, somebody related by blood, marriage, or law, borrower's employer or labor union, a close friend in which we can document a long-standing relationship, charitable organization, government agency or public entity that has a program providing home ownership assistance for low to moderate income families or first-time home buyers. For example, right now the MHGC program would fall into this last category of government agencies. There are certain individuals that are not allowed to provide a gift to the buyers. The gift donor may not be a person or entity with an interest in the sale of the property. For instance, the property seller, real estate agent or broker on both the buyer or the seller side, a builder, or any other associated entity. It is the responsibility of the lender to determine if the funds were provided through an acceptable source, and we will review the items needed to verify this in a later slide. There are certain circumstances in which the borrower must have a minimum contribution. For conventional loans, if the gift is less than 20%, the borrower must contribute 5% of their own funds. For instance, if you have a buyer wishing to put down 10% for a down payment, they would need to contribute 5% of their own funds and then would be able to be gifted an additional 5%. If the gift is greater than 20%, there is no minimum amount the borrower must contribute. Therefore, if your client is going to be putting down 20% on the home, the entire amount can be a gift. If they are putting down anything over 20%, they can still get it as a gift with no minimum contribution. For FHA loans, there is no minimum contribution required from the borrower, and the entire thing can be a gift. So the 3.5% down payment can be gifted. There are some documents that we will need to verify the transfer of the funds from the donor to the borrower and verify that these are from acceptable sources. The first is going to be a gift letter. The gift letter will show the donor's name, address, and telephone number and specify the dollar amount of the gift. We also will want on that gift letter documentation to verify the relationship between the donor and the borrower to again verify it's from an acceptable source. Once we have the gift letter, we're going to ask for a copy of the withdrawal document from the donor's account. Also a copy of the check made out to the buyer, and a copy of the borrower's deposit slip and bank statement showing the deposit into their bank account. There are a few additional documents or ways to transfer the funds that can be discussed on a one-on-one basis. A few key things to remember when thinking about gift funds. The portion of the gift not used to meet closing requirements may be counted as reserves for the buyer. And in general, FHA is not concerned with how a donor obtains gift funds, provided they are not derived in any manner from a party to the sales transaction, from any of those sources we discussed that were unacceptable. Therefore, a donor could go and get a personal loan and able to fund the gift for the buyer, as long as, again, the buyer is not responsible for paying back any portion of those gift funds. Cash on hand is not an acceptable source of donor gift funds. It must be from a bank account or another account in which we can document that transfer on paper. And only family members may provide equity credit as a gift on property being sold to other family members. Thank you, and I hope you've enjoyed this Friday Guideline update, and feel free to give us a call if you have any questions.